Hey, welcome back to the channel, Fully Invested Phi Labs. Today we'll be going over portfolio updates from week 29 and 30th, since I missed last week, since I started investing my full paycheck into my portfolio at the end of May 2025. So if I'm not mistaken, we're like month 7 now of doing the strategy. So yeah, before we get started, this video is for entertainment and educational purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. All I'm doing is simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and there is risk for loss of principal. Don't copy what I'm investing blindly without understanding the risks and researching things on your own and doing your own due diligence. No returns are guaranteed. So that said, let's just jump in. So for anyone that needs a refresher on the channel, what we do here is you can see this flowchart of how I invest 100% of my paychecks every month in both growth and high yield income ETFs and live out of my brokerage account. That means that at a minimum, 10.8K gets invested every month in the portfolio and that I pay all my bills out of my Robinhood brokerage account. If you want an in-depth breakdown of this, you can watch a video of me breaking this whole chart down in depth at the top right. And yeah, let's just dive right in. So we pop over to Robinhood here, have a look at the portfolio over the last 2 weeks. So yeah, apologies for missing last week's update. Had a little trip planned that I had to go to. So just got to catch up on the last 2 weeks of performance really. So yeah, on Friday. So actually I was up somewhere like 2.5% yesterday, but because I didn't film it quite yesterday on Friday. Like this is just showing like today's Saturday performance. So if we look on the week, I'm slightly down. I was almost flat, just down $122 or negative 0.008% on the month. Actually positive for the first time in a bit, which is nice. So I'm up 9.6K or 6.86%. On 3 months, I'm down, just given like the big dip that the portfolio had in November. So still recovering from that one. There was a bit of a uptick last week or the previous 2 weeks ago, but yeah, it's kind of dipped back down and that's kind of slowly going back up. So we'll see how it fares before the end of December, if there is like some sort of standing rally or not. Year to date, I'm back to the positive. So if I just go to all actually. So yeah, you can kind of see, so the big dips that happened end of October to the middle of November, and it kind of started picking back up, but yeah, now it's kind of ticked back down and we'll see. It's kind of maybe going back up. We'll see how next week goes. But yeah, in the positive by 6.7K or 4.7%. And yeah, that's how it's looking. If we pop over to the investment folio sheet, we'll kind of dive into some of these numbers more in depth here and kind of get a bigger picture of everything. So yeah, so you can kind of see here, this was up this much on Friday. And then even if you factor in the dividends, I was actually up even more because a bunch of the dividends dropped on Friday. But yeah, if we have a kind of bird's eye view of everything here. So as it stands in the portfolio, my full market value is $293,306. So yeah, if you add up all my positions, right, that's what it adds up to. So yeah, I don't know if we're going to quite hit the $300,000 mark by the end of this month. We'll see if there is an uptick in the portfolio, potentially. But yeah, accounting for another paycheck that's coming in, like, yeah, we'll just be under 300,000, assuming things hold up and there's not like another large dip that happens. But after that, margin used right now is sitting at $141,937. There's the realized gains and losses that I had the other week from trimming Apple and Microsoft. And the net value of the portfolio, like roughly matching what was in Robinhood, is at $151,369. So yeah, if we pop over here, so this stuff got a little bit more complicated given the realized gains here, but we'll kind of talk through them. So if we look over, so most things are green, even if you look at like the total returns, right? So the growth side, like anything that's in white over here. Yeah, the only thing that's red really is Costco. So that's why I like my last paycheck investing video, I threw a little bit more in there. Yeah. I think whenever there's like a big tech downturn, I'm hopeful that like Costco will kind of hold up better and people will be kind of rotating into names like that. So other than that, the other ones like SPMO is obviously in the red, given that it's a fresh position and there was like several dips the last 2 weeks or so, but it's kind of recovered nicely. And I'm very glad in the end that I dollar cost averaged my Apple and Microsoft earnings into this versus just dumping it all in one go, because yeah, I felt like I would have lost a lot more. And then if we pop over to the high yield names over here, so XPAY is doing good. It's actually green even in unrealized gains, which is nice. Even more so with total return, given that has like some some backlog of like other names that carried before XPAY that I have dividends from. WPAY is kind of recovering a bit nicely. It's definitely still down 10% even on total return, but yeah, it's just recovered nicely from where it was. Yeah, GOW, NVDY, HUI, those are all, YMAX are all doing good as well. ULTY still negative 11% here. Also, like as a little update for ULTY that we'll get into, but its margin maintenance went back down, and we'll cover that after we finish looking at the portfolio. TDAQ, fresh position, but got the first dividend from that this week, a little $26, or sorry, $28. And yeah, so in the green with that, given the gains and then also the dividend. QQI is holding up well. Gold is holding up well as well too. So so far it's been working out as a hedge, and I'm kind of looking forward to kind of keep adding more to this. BTCI is holding up well in total returns, like less so in unrealized gains here. And then Misty is way down. So yeah, way down 75% and down 26% even with total returns. So yeah, Misty is definitely the problem child in the portfolio right now, I'd say. Like still, I still believe it could potentially turn around. Like if Bitcoin gets like it's an upswing, like Misty will kind of come and an MSTR really will come along for the ride. But like, yeah, it's definitely just gone hit like really hard this year, given how much MSTR has gone down, right? And yeah, it's the leverage play on Bitcoin. So it goes up really high, but also kind of can come down really hard. So we'll see. Like, yeah, because some days, like I remember months ago when like MSTR would go up like, I don't know, 8% on a day, like, you know, Misty would go up like 6-7%. So it can still kind of go up, but it's obviously capped, but keeping an eye on it. I don't know that I want to sell out of it quite yet, and I'll kind of go over that a little bit later too. But if we go over the numbers, so if we go over the raw numbers, right, outside of the realized gains for the full portfolio, I'm down 7.28% or 23K. If you factor in the total returns, I'm still up 11.8% or 37.3K. If you factor in the margin, like that percentage is higher here, 15.22% for the unrealized side. But yeah, once we factor in the realized gains, right? And this was important to add once I made those big Microsoft sales, because like this was what my numbers were at before I realized some of those gains, right? So I just want to kind of keep an eye on that too. Like both scenarios, or really all three different scenarios of it, given the margin. But this at one point, like my unrealized gains side, right, factoring in the realized stuff, like this was green at a certain point in the year, given when stuff was going up, and then as stuff has dipped down, has dipped back in the red. But yeah, I think as stuff gradually goes up, I should hopefully see this kind of come back into the green. But the realized side with margin, like I'm down 4.65% or down 7K, or I'm up 53.3K or 16.86% with the total return. And if we factor in margin, that's 24.68%. So yeah, sorry, a lot of things here. I'll have to think of like how I better present this, or maybe I just go with these final numbers here, just so to not have to rattle off so much, because yeah, just a lot of different lines to go through here. But yeah, if we pop over to the different areas over here, so on the growth side, I have 161K that's in that, so that's just under 55% allocation. And on the high yield income side, I'm sitting at 132.2K of assets allocated to it, or 45%. So that's what makes up the 293.3K here. So yeah, I think that's at a good level. I think like I generally maybe want to keep that at that level, like 55% for growth feels good. Like, I don't know, maybe eventually I make that 60-40 potentially to make it a bit cleaner. I like cleaner number delineations. But yeah, if we check over the margin health over here. So as I mentioned, the margin's sitting at 141.99K, so quite a bit. The total margin I can actually take out is actually 208.5K. So that's my buying power, right? So that's the buying power is basically the difference between this number and this number. So yeah, I could take up to that point, but I don't want to. I want to keep a good buffer, given that I'm actively drawing from the portfolio, and yeah, just want to keep that buffer healthy, right? So my margin maintenance currently is setting at 74.8K. So that's like a margin buffer of 76.4K. So basically my portfolio value would have to fall by this amount, the 76.4K, to basically hit this number. And that's what would trigger a margin call, right? So really what that ends up being is that's a 50.54% drop on this number if that were to happen. Or it's a 26.08% drop on this market value of the portfolio for that to drop. So really the number I'm mostly keeping in touch with is this one, right? Because This one's a bit misleading. That's what Robinhood uses too for over here. So you can kind of see 50.64%. But I think that just kind of gives you a false sense of safety, right? Like the market, realistically, the market would have to drop 26.08% because this is what's invested in the market. Like it's not just this number. So this number is basically amplified by the margin that you're using. So that's why this one's like highlighted green here, because this is the number I'm always kind of keeping an eye on. Like I don't want this to get too crazy. So like if this gets to like, I don't know, even 15%, 10%, that gets like starts getting dicey, because I know we've seen like 10% drops in a day or over a week, right? So that gets into dangerous territory. So gradually I'm hoping to kind of just get this up in general, right? And as far as my equity, I'm sitting at 51.61% here, so well above 50%. My interest rate dropped, as I mentioned the other day, from the Fed funds rate. So now I'm paying roughly $528 a month for interest, and it's pretty good because considering that like I'm taking in roughly 6.1K here, and I probably need to update my estimates for this soon. So that's a pretty good deal. Like I'm paying $528 in interest to get $6,143 a month. I think that's a pretty good spread and a good deal. Yeah, and then as far as my blended margin maintenance percentage, this has gone down, as you've probably noticed. So this is 25.53%. And the big reason for that is that the ULTY margin maintenance came back down. So this was like 70% for the last couple of weeks since the reverse split, and that has come down. So I'm very glad to have seen that. That happened in the middle of this week. And yeah, we'll go over that a little bit later as well, too, as far as kind of just like portfolio news. But yeah, that's where all the numbers are sitting at here. Yeah, as I mentioned, like I'm monthly right now, I'm estimating like a 6.1K. Might be a bit high right now, like given like the last few weeks payments have been definitely a little bit lower given the market turbulence and downtrends. So yeah, I'll probably have to take another look at the estimates here and update the median numbers that I was getting for this column here. Let's pop over to Snowball Analytics to kind of look at stuff a little bit more in depth as far as performance and things like that. Yeah, this is how things are breaking down now between all the different pies, right? So the growth and div growth anchor ETFs are sitting much larger now, which is what the goal was when I sold Apple and Microsoft. So growth single stocks is like 15% of the portfolio roughly. Like maybe eventually I should get this down to like 10% to kind of keep them relatively smaller in the portfolio. But that's how it's looking. So if we pop over to the growth tab here, so let's look at the performance against the S&P, right? So in orange is the S&P and blue is my portfolio here. So on the last 7 days, the S&P has been beating me out. So it was down 0.17% and I was down 0.52%. On the month, I'm actually beating him out, which is nice. So I'm up 7.33% or 10.3K, and S&P is up 4.36% or 6.164K. On 3 months, the S&P is beating me out here. So I'm down 5.77% or 9.2K. The S&P is up 4.2% or 4.2K or 2.61%. So, and I think like how they do this here is like assuming that like if I had been invested in the S&P instead of my portfolio essentially, right? So on the 6 months, I'm just about matching it. I'm up 13.32% or 17.7K. And the S&P is up 18.7K or 13.64%. Year to date, just slightly under, just by 1% here. So up 14.64% or 19.3K, and the S&P's up 21.4K or 15.61%. And yeah, so definitely roughly matching the S&P. Was out for point for a bit, but this recent dip definitely took a hit and still trying to recover from that one essentially. So if we pop over to the dividend calendar now, yeah, we can kind of have a look there. So the numbers are quite a bit different because like yeah, Snowball always takes the last payout and basically projects that out. So that's why this is coming a bit lower. So payments were a bit lower this week. So that's why this is lower at like 4.8K instead of like the 6.1 that I'm estimating. And yeah, we can kind of take a look since last check-in was on December 5th here. So got a good number of payments between GOW, WPAY, got Microsoft's quarterly dividend here. Got XPAY that previous week as well too, which is being a nice stable like 21.24%. That's what I really appreciated from XPAY. Like I used to be in CRF, and this is actually what I swapped it for XPAY, and it's like a similar 20+% dividend minus, of course, no drip at NAV. But I've appreciated how stable this is and how well it's actually kept up with its NAV and its unrealized gains. It's in the positive. So yeah, Hui came in last week as well. Misty, NVDY, the usual suspects. And this week we got some good dividends from Google. It's quarterly one. It's a cool 0.27%. CHD came in at 3.82%. So a nice $439 that got reinvested in the portfolio. So anything on the growth side of the portfolio, I generally reinvest. Only the high yield side, that's what I just deposit to cash and margin, right? So GOW again. So this is just kind of steadily growing because I've just been kind of constantly investing any YouTube earnings. So things from like my YouTube earnings, Snowball referrals, things like that, Patreon, that all goes into GOWs as kind of like a little tracker stock essentially for my earnings. So even if we check here, so $1,500 roughly that I've gotten from my YouTube stuff, which has been nice. Yeah, got my first TDAQ dividend as well too, which was at 17.19%, which was nice. Yeah, WPAY came in at $227 or 57% this week. ULTY came in at $174 or 65% this week. YMAX came in at $192 or 61% this week. WPAY at $12 or 43%. And MISTY at $53 or 62%. And NVDY came in at $193 or 42%. So the one thing to note is that these percentages are all based on the price that the ETF is that week, right? So one thing that's important that I want to keep more in mind, and we'll actually look at this in a second here. And then so this far, it's looking like this month I might be hitting 5.7K, which is nice. Yeah, we can kind of see how stuff has been progressing ever since I started in May, right? It's kind of steadily going up, some down months here and there, but definitely slowly trending up, which has been nice. But yeah, if we pop over to dividends, and shout out to someone in the comments that mentioned this, because I last time I was mentioning how I wanted to potentially calculate the yield on cost better for myself as dividends come in. But it turns out Snowball actually had it, and I just never had quite noticed it when I was tabbing over these. So this is nice. So like I just mentioned all the yields, right, based on the payments that week. So this page shows both numbers, which is great. So if we check here for ULTY, for example, like this week, it was a 65% payment, right? But if we check the yield on cost based on like my whatchamacallit, my average cost per share, this is the actual dividend, that percentage that I got based on the payment this week. So appreciate getting that actual real number, right? So ULTY's payment for me this week was actually a 45% yield given my average cost basis. MISTY here, this was an interesting one, seeing this. So like, yeah, MISTY was at 62% based on its like price because it got decimated. But my yield on cost right now, because my shares are so expensive, right? So my MISTY shares are sitting at oops, did I? Yeah, no, that's right. Yeah, so this is at $125.80. So yeah, there's a 75% drop on MISTY, right? Yeah, stuff got reversed, adjusted because of the reverse split. So yeah, the yield is pretty low. So I want to keep an eye on that. Like that's not great. Like knowing that, like if let's say MISTY didn't recover, right? Like I'm still getting just a 16% yield on the money that's left in it. So like the 4.4K, like it could potentially just be better served being an ULTY or YMAX or WPAY, right? And some other fund of funds that's actually returning a better yield on that money. So I'm going to keep an eye on this. This kind of is something to keep an eye on, depending on if it'll recover or not. So keeping an eye on that. YMAX, so that one's a 61% yield, or my yield on cost is like actually 48% this week on the dividend. WPAY was a 57% yield, but the yield on cost for me was 48%. So all pretty good yields, like for ULTY, YMAX, and WPAY. Like I'm kind of considering them like kind of anchors for me as far as like, because they're fund of funds, and yes, they're a little bit more volatile than like an index. But what I want from these is like a higher yield, and then I'm slowly building up things like QQQI and TDAQ or whatnot for a more stable lower yielder. And actually, let me just switch here. So like I'm just gonna switch over to just the high yield stuff. So you can kind of see here, actually, like pay attention to this. So this is the full portfolio yield, right? And 18.36% yield on cost. But when I only isolate it to my high yield ones, this is like my actual yield right now. So 42.31% worth of dividends this week, or 32.15% yield on cost, right? So that one's good to see. And so if we go to WHOI, yeah, that was a 43% yield dividend this week, or a 31% yield on cost for me. NVDY had a 42% dividend, or a yield on cost of 28% for me. GOW was 33.98%, or 35% yield on cost for me. So you get the idea here. So BTCI was 27, but mine was 18.93%. XPAY was stable, like almost kind of matching at 21%. TDAQ as well as a recent investment, so it's pretty close, and same for QQQI. So it's nice to kind of keep an eye on this, on like how far the yield and yield on cost diverges. So I'm definitely keeping an eye on Misty and NVDY and HUI, right? So yeah, like I mentioned too. So as far as like kind of like updates the portfolio. So first things first, like I am keeping an eye on Misty, NVDY, HUI. Those are potentially the three that I'm looking at to either trim or potentially just sell and reinvest into like fund of funds like ULTY, YMAX, and WPAY. So I'm still debating it, honestly. I'm not sure if I want to kind of realize all these losses quite yet. So I have like 15K of gains and maybe actually closer to 9 because there was some losses I realized with like CRF earlier in the year. So I need to actually calculate what my realized gains are this week or this year, just to kind of get an idea of what I have to play with and what I can offset essentially. So still need to work through that. I'm thinking on it still. So keeping an eye on those, just to be fully transparent on those. So you saw how long I mulled over the Apple and Microsoft thing for months. So same thing for these. Not going to pull the trigger on these yet. So still doing my due diligence on that. And as I mentioned too, I did finish all my buys of SPMO right this week. So there's like a full like 36.2K in that. So there was like 34.7 or whatnot that I had from my Microsoft trimming proceeds. So all of that went into SPMO, and I just dollar cost average like every day since I did that sale essentially. So I was putting like 5K a day, and I threw in another 1,500 as well too from my Paycheck investing last week. So yeah, so this is making for a nice anchor between all four of these positions really. So yeah, between all these positions, that's 117K. So I think these make for solid anchors in my portfolio, like almost, yeah, over definitely more than half for the equity, but like, yeah, less than half for the market value there. So definitely want to gradually push that up as like solid anchors. And yeah, as far as ULTY, like I mentioned, so we'll pop over to Robinhood here. Yeah, I noticed this week that its maintenance ratio actually went down, which is great. So Misty's still at 35%. Doesn't seem like this got affected by the reverse split, which was nice. So that's still 35%. WPAY and GOW are 30%, and practically everything else that I have is 25%. So, and ULTY joined the 25% gang again. So this had like ticked back up to 70% for a hot second there for the last couple of weeks after the reverse split. And I guess now that like the strategy has changed a bit, and yeah, now that the share price is like a lot higher, I think they've readjusted this, which is good. So that's nice, because really that was the thing that was kind of putting ULTY in danger as far as like me potentially selling out and reinvesting into like YMAX or other fund of funds. Just because like, yeah, I was just eating up so much blended margin maintenance percentage, right? So what the effect that has is that essentially this margin maintenance number goes up, right? So like we can kind of even just do it as an example here. So if I threw ULTY back at 70%, you can see that my blended margin maintenance ratio goes up to like 27.64%. And let's see if I can kind of just like Control Z this. Yeah, so you can kind of see how much this affects things, right? So right now this is my new number. So that makes my margin buffer at 26% here. But if we push back ULTY to 70%, you can see my margin maintenance goes way up and my margin buffer goes down as well too. So ideally you always want your blended margin maintenance to be as low as possible. So like mine's like close to 25% now that the ULTY is back down to 25%. So that was a huge change given that I have a lot of capital in ULTY. So very happy with that change. And that makes it honestly like makes me a lot more comfortable to kind of start reinvesting into ULTY now with any paychecks that come in. So generally what I've been focusing on for my high yield ETF paychecks right now is mostly the fund and funds. I'm not doing any more single stock unless it's like BTCI, which is Bitcoin, but that's the exception. So like I'd either be putting it in stuff like WPAY, ULTY, YMAX, slowly building up TDAQ and QQQI as well too. On XPAY, I haven't touched XPAY in a little bit, but that could be also potentially a thing too if I want like a solid 20% yield on whatever I put in there. So for now, I'm not touching any of the single names anymore. I'm kind of just letting those ride and kind of get its income. And that's how it's looking for the portfolio this week. So definitely had a good uptrend the other week, but it kind of slowly came down this week, right? So it came down and then it kind of came back up this week towards the back end of the week, which is nice. But we're on the road to recovery. So we'll see how much I can recover back from this November dip over the next couple weeks. Let's fingers crossed for a nice little Santa rally, get into the new year. We'll see. And as far as this week's finance video of the week, I wanted to do a repeat of one that I featured before. So Velocity Portfolio, Rob over there. So he put out a nice little video the other week where, for one, I featured him before, like his channel a couple months ago when he made the switch to living out of his brokerage account. And he's been documenting his journey from week to week. And so this was his week 11 video. And honestly, I thought his last video was particularly poignant because he got like pretty personal about like what living out of the brokerage means to him and like how it's helped him get out of his like scarcity mindset that set in from a tough childhood that he's had. I'll let him get into like all the details of it, but that's helped him get him and his family in a good place financially, and also kind of put him in the great position to be able to give back and adopt a family for the holidays, as far as kind of getting them meals and presents and all that, which is really, really admirable. So yeah, much appreciated to Rob. He's a great active member on our Discord as well too. So it's been great to share the space with him and other YouTubers in the community, and then also the community members that are not YouTubers that are on that same financial journey, whether we're living in the brokerage or not. Yeah, appreciate everybody that's in the community. So definitely give his video a check. I'll link it in the top here and then also in the description below. So check it out. And that's the update. Yeah, sorry that went a bit longer than planned, but as usual, if you want to follow me off YouTube, there's a bunch of different ways you can do it. You can do it on Blossom Social here. All the links of those are in the description below. You can follow me on all these different places for free. You can follow my Snowball portfolio, which I showed. So all the same numbers that I was showing you can kind of like deep dive on those on your own, kind of see all my total profits, like all my dividends as well too, that same yield on cost stuff I was showing you, and love being transparent with all that. There's also my Patreon that you can follow me on. So day and date, I try to put all my YouTube videos on here. So my full backlog across both channels are on here. And it's just a way for me to have a little backup in case there's any more YouTube shenanigans. So give me a follow there. And of course, there's the Discord channel. So we're pushing over 200 members strong. And it's another spot where I put also my trade alerts, and other people put their trade alerts as well too. So you would have gotten a heads up on like my SPMO buys. I had a little BTCI buy with my cashback this week. And then you can kind of see another 5K DCA buy of SPMO. That was my final one. I posted about that earlier this week. So a lot of different spots can follow me along. So if you got value out of this and you're looking forward to follow future portfolio updates, future full paycheck investing videos, give me a like and subscribe on Fully Invested Fi Labs or on Fully Invested Fi, the main channel, which I'll be back to posting on there at the end of January. And I'll catch you on the next one. Peace.